What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, the 13F filings for AMC are starting to roll in. We still have about a week to 2 weeks out until that 45-day deadline comes through. But I did notice something today on Fintel, and it was a massive, massive increase in institutional ownership. This was a 13G filing. They come out once a year, and it shows a big position being taken by a massive fund. We're going to go over that. But before we do, I do want to get into this article. It came out on Friday, and it's talking about SEC Chairman Gary Gensler's position on his regulatory agenda, what it means for investors. This is a very good article. You can go look this up on Google to read everything word for word. I will say the title where it says what it means for investors, it really is focused on retail investors. He has always had a position on trying to make things fair. However, this is not an easy movement. I'm just going to go over a couple of highlights on what his plan is. I will mention this first. It is one of the largest regulatory agendas that they have seen from the SEC in many years. A couple things that you can imagine. First of all, they're highlighting insider trading. It is way too obvious when a stock is going to report poor earnings or have to give poor guidance that their insiders are privy to that knowledge before everybody, because they know exactly what the next 3 to 6 months of their company is going to look like. He wants to focus on changing some of those rules, as well as shorting and the loaning or borrowing of a stock. Now, if you were unaware, there are two things that actually are mandated from the Dodd-Frank Act back in 2010, which was created after the 2008-2009 crash. And both of these rules, like I said, are mandated. However, they've never been implemented. So that's a part of the issues of actually having enforcement. But the good thing about this, in my eyes, is the foundation and the groundwork is already there. And like I said, they've already made mandates and approvals of this years ago. So getting that to be revamped and actually enforced should not be a very difficult thing. The other thing is obviously payment for order flow. Now, when payment for order flow first came out, I was actually really excited because I didn't think about the serious conflict of interest that would happen from this. But I remember back in 2016 where I paid almost $25,000 in commissions to TD Ameritrade. I was originally paying $695 a trade. I got that down to $495 a trade, and they even gave me 500 free trades that year, and I still paid just under $25,000 in commissions. So when this first came out, I was excited. It was going to be zero commissions. I didn't think anything about the abuse that would happen that we've clearly seen, and this is how he wants to focus. Changes being made towards this. And like I said, personally, I wouldn't say I'm very against payment for order flow. It's just the conflict of interest and having it not be completely transparent, and a unbiased third-party market maker, okay, who is taking the difference between the bid and the ask, that little bit of the spread as their profit in order to be able to stay afloat. And this is exactly what he wants to try to do. I will highlight this right here where it says the retail investor is getting a better deal than they ever have before is a bunch of BS. And the reason being is because these market makers know retail order flow in order to change direction and manipulate us out of the price action. So these are still on the agendas. I know it is very slow moving, but we'll have to see exactly what the next 6 months rolls out from this. Now, let's get into what I had seen today on our good old Fintel. I happened to scroll through and I immediately jumped down here to the 13F filings, and there hasn't been too many changes as the 7th. They have 45 days to be able to report Q4, and a lot of flow starts to come in towards the end of that 45-day period. But I did notice this. It was a 13G filing. These are normally filed once a year unless there's massive changes like there was here with Wanda. We remember that back from May of last year when they sold out pretty much right before the run up. But I noticed this right here, guys. BlackRock went from about 6 million shares to 43 million shares, representing an 8.3% ownership in the entire AMC stock. I am going to be looking forward to see exactly what Vanguard does report, which they should be soon if there has been any changes. Looking more specifically at Vanguard, they do tend to report every single year. All right. So it does show, 21, 20, all the way back. So it's going to be interesting to see exactly what their stance is. But looking at BlackRock, it's a massive, massive change. 8.3% ownership, 43 million shares. They're literally just starting to eventually own the entire market. They were purchasing single family homes at a rapid record pace last year, just buying everything they can. This is a huge, huge institution just, starting to take over everything. But like I said, it was crazy just to see 43 million shares. They're gonna dictate a lot of the price movement that comes through this. Whether they're lending out shares, okay, which still has to be issued. The issues of short selling and of loaning of a stock, they are approved to do that. Okay, to be able to collect some bit of fee. However, the amount it costs to borrow isn't significant for me to see that as a value. However, they do have 43 million shares, but seeing that is a very, very small, minute position. But they did take this obviously for a reason going forward, especially because now we are all the way back sitting at that $14 to $15 level where we were, which was a major form of resistance back before the June run up, which, as we know, previous resistance will tend to act as new support going forward. So I just wanted to update this. We're going to continue to look at the market beat just to show what the overall summary is of these 13F filings, to see if the price being brought down has been solely towards additional shorting, all right, both from the institutional side and the retail side, or has it been from big funds solely selling off some of their positions, because obviously those massive blocks will pull down the price. You're starting to see a little bit of that happen with Facebook today. You can see there's a big, big seller getting into it, and you can see that price getting suppressed a little bit. But guys, that's it for this video. I'll keep you updated, and I'll see you in the next one.